Hello, traders. Excuse me. This is Blake Morrow, and you are listening to the Daily Roundup. I hope everybody's having a great trading session. It is damn volatile out there. There are fixing flows going through, random moves that are happening, and like I said, it's random. Like we were talking to the guys in Barclays. We have a direct connection with them and a few other banks, just asking, hey, do you guys see anything that's going on? And with like this is a prime example. Here's a 5-minute chart of the euro. In 20 minutes, I mean, the euro is trading 40 offered, then we're 90 bid. I mean, that right there is a 50 pip move. Why? No one knows. Cable, we were 20 offered, 50 pip rally. Why? No one knows. So a lot of these random moves out of nowhere are just happening, and they're probably flow related more than anything. I guess when you're talking like the dollar in general, the dollar remains in breakdown territory, right? I mean, for all intents and purposes, we are in breakdown territory and holding the breakdown point, which at this stage is at this 94 level, because that was the multi-year trend line. And I think while we're below those important support levels, selling is going to come at random stages. You're going to be sitting there, and all of a sudden that happens. Do I think the dollar is doomed? I don't know. A lot of one of the sentiment shifts that happened this week, early this week, is a lot of people were looking at the dollar as far as sorry, real quick, I just saw something. People were talking about the seasonal bearishness of the dollar early this week, and then the attitude changed over the last couple of days, and people are like, well, maybe this is one of the seasonal times that it's different. I don't know if that's necessarily the case. I mean, based on where the stock market is sitting at all-time highs, but I will say this, while the S&P is elevated at these levels, and this is not funny, but funny in a sense that I just remember all day yesterday I was looking at the S&P, and we were trading 25.26 bid, 33.25, 33.26, and here we are 33.26. We're not selling off. Now we're not building on this rally, but at the same time we're not selling off. So while we're not selling off, this gives the one of the feathers in the cap for dollar bears to stay bearish the dollar and keep the euro elevated, the cable elevated, the Aussie elevated, so on and so forth. I would think that we have to get back below 3,300 in order for equities to, or actually let me take that back, for the dollar to actually firm up a little bit, and we're going to have to get all the way back below 3,200 before the dollar could really bounce. Okay, so while we're elevated at these levels, again, I guess we can't be too shocked when we see dollar weakness. The one thing that I am a little irritated though, because I look at the euro and I'm like, okay, that's a false breakout up there, or at least rejection of the resistance. I take a look at the Aussie and I'm like, that was a false breakout, and I was using this bounce back to the 618 here to sell into strength, and here we are just back at the key resistance. I'm hoping the Aussie will turn, but at the same time, going back to what I was just saying, while stocks are elevated, I guess we can't be too surprised that the dollar continues to stay weak, right? So that's the gist of it. The Kiwi's actually back above at 618 here, but we've failed, a couple times the last few days here. So that's something I pay attention about. The dollar Canadian's actually holding up relatively well, despite the dollar weakness. And that's something that I'm going to be watching, especially if the dollar Canadian can get. I was starting to get excited while we were trading above 133, but I think really what has to happen is we have to trade above the highs here, which come in at 32 or 33.20, 23, which I'm going to say is really, we can actually move that up a little bit. I'll have to do that. You move it up to 33.28, I think is good. So once you get back above 33.30, that might, signal us that maybe the dollar Canadian's ready to bounce. One of the things that's really important going into tomorrow, and let's just talk about this really quick. Tomorrow is the NFP, and so we have not just U.S. dollar NFP, we have employment data coming out of Canada as well. So I do think this is a big deal, because if we look at the dollar Canadian, let's go over to the dollar Canadian, and I'm going to pull up a chart that I haven't drawn on so much. So let me delete anything that's on there. Let's go to the daily chart. Actually, let's go to the weekly chart. That'll be better. So I think by tomorrow, it'll be pretty important if the dollar Canadian, let's just do it from here. If the dollar Canadian closes the week back above 33.30, 33.50, I think that's going to be a pretty bullish event for the dollar Canadian, because that would be a false breakdown, right? Is that going to happen? I don't know. I mean, do I have any Canadian positions in anticipation of that? No, but as you can see, it would be a false breakdown, close back above the 78% retracement. It's probably going to lead us to a bit of a short squeeze. So again, with Canadian and U.S. jobs reports happening tomorrow, and with there's a good chance that the U.S. will beat, Canada might actually miss, and if that's the case, then we might actually get a reversal in the dollar Canadian. I don't know, but I'm going to be watching that one really carefully going into tomorrow. One of the other things that we should look at, one of my colleagues, he pointed out that here's gold. Obviously, gold's really strong today, but let's look at gold miners. Let's go to the junior miners. What is the junior JDXG? This is it, right? JDXJ. Look at the miners today, and look at how weak they are, right? That's something to keep an eye on. Let's go to gold miners, just regular gold miners. It's junior miners. Oh, right here, GDX. Same type of thing. They're really underperforming the precious metals. So just keep that in mind. Maybe that's signaling that that gold and silver might pull back a little bit. Again, I'm not necessarily bearish gold and silver, but I do think that there is a risk of a pullback towards, in gold maybe towards 2000 or 1980, and in silver maybe back down towards $26. So that's something I think that we should just keep an eye on, especially if you're trading any precious metals. Other than that, guys, it's Thursday. It's ahead of non-farm payroll. Things are probably going to be quiet the rest of the day going into tomorrow. So trades carefully. Today's intraday moves in like the euro, for example. I mean, this is an exact reason why you have to be really careful. There's the euro, there's the pound. It's like you get excited, like this looks like head and shoulder pattern. You get all excited about some downside here, and then all of a sudden it just squeezes right back up. So it's an important day to just stay nimble, don't get too aggressive, and with that being said, I will see you tomorrow. And for those of you that are supporting ForexAnalytix. Thank you so much. You guys listening live, I appreciate each and every one of you. So thank you so much. I'll see you tomorrow morning on the Face webinar, guys. Have a great one. Thanks, Brock.